Okay. Cho làm mấy làm mấy mùi tiện. We are in a like holiday mood. Okay. Good. We finish this. Okay. Yeah, we start a little bit about tax on incomes. We study about residency status, which we learned a few months ago. But at the time we learned about tax on salary and withholding tax. But today we learn residency status for tax on income, but actually the same. But tax on income, they also include the legal persons and what we call the non-resident taxpayers. Okay, non-resident taxpayer, if you are a physical person, but not a resident, but receive income. Physical person refer to any person who is not a resident, but receives income. Yeah, you receive income from Cambodian source. We learn about Cambodian source. So if you are a non-resident physical person, receive income, you are become what we call a non-resident taxpayers. You can be taxed through withholding tax, or in worst case scenario, you're going to be taxed through tax on income. Withholding tax is easy. You pay 14% on income you receive, but income tax have more implication, trying to justify your income plus claim deduction. And the tax rate a little bit higher compared to withholding tax. And if you are a legal person, refer to any entity which is not a residence entity, maintain permanent establishment. Yeah, we discussed a little bit what is permanent establishment are. So here is the example of a permanent establishment, a brand of foreign enterprise, agency. Yeah, you are an agent of a foreign companies. You, sometimes it depends, you also become a permanent establishment. So if you become a permanent establishment of a foreign entity, the tax department will go after you. They ask you to pay tax on behalf of a non-resident. Similar to withholding tax, but withholding tax only 14% on, the payments. But income tax, different. They will try to ask you, what you pay, should enough or not enough. Okay, what kind of expense you can justify, or whatever. How about VAT? Yeah, we learn about VAT, right? Okay, because if you acting on behalf of a non-resident and the non-resident generate income from source of from Cambodia, if you now become a permanent establishment, then you have to pay income tax plus VAT, maybe other tax on behalf of a non-resident. And that's why the permanent establishment is very, very complicated. Not many people want to do it. Agency can be dependent agency or independent agency. As long as if you are an agent of a non-resident, if you have the right to conclude contracts on behalf of the non-resident, that's the critical points. Conclude contract. On behalf. So if you have the right to conclude contract on behalf, which means, okay, a non-resident asks you to represent and sell some product and service, and then they provide a right, say, hey, after we negotiate the price, please sign on my behalf. Yeah. Now, even though you are independent, now you become a permanent establishment of foreign entities. And then you are liable to register and pay income tax on behalf of a non-resident on the incomes that the non-resident entity generate from entity or maybe physical person generate from Cambodia. not just withholding tax alone. Okay. Next is Office of a Foreign Enterprise. So this kind of representative office, okay. Some foreign entity, when they not sure whether Cambodia is a good market for them, and they try to engage with a third party, try to collect some information, but not enough. Then what they do is they set up their own office, send a few of their own people from overseas to work here and try to observe the market, try to do a market survey, trying to communicate, or maybe trying to do some marketing or business development here in Cambodia. Do organize some event, trade fair sometimes, try to introduce the product to the customer and testing what they think about the products. If they see the good response, then they will set up a companies and trying to do business here. Or if not, a few years later, they will close and go back home. Yeah, this is kind of a office that is set up to collect information for the head office to analyze whether Cambodia is a good market for them. Yeah. Rep office, many countries allow, especially developing country. Yeah, developing country, they allow a foreign entity to set up an office, try to do all of those activity. But the rep office cannot sell service and good, cannot do sell activity. They can do a marketing, they can do a research activity, but not a sell activity. Okay. If they want to do a sell there, and then they can set up a branch or maybe a subsidiary to perform those activities. Cambodia, we don't have a limited time frame. Some countries, they only limit, if you set up a rep office, you can get a license only 3 years. It means you can operate only 3 years. Okay, after 3 years, if you say, oh, not enough times, then you have to request to the government again to extend the license for another 1 year or 2 years maximum. But Cambodia, we have unlimited time frame, so you can have a rep office forever. I have seen some non-resident company takes advantage from this loophole of law. They maintain rep office for 10, 20 years. Yeah. And they employ so many staff, 40 or 50 staff to do a sell activity, which is violate the law on commercial enterprise and also violate law on taxations, which they never pay tax. Okay, next is that warehouse, factory, workshop, mine, oil and gas well, quarry, any other place of extraction of natural resources, farm, plantation. Yeah, Cambodia is a good country. Sometimes a non-resident can come to set up a business without register. Yeah, that happens. Or sometimes, all of this, maybe they engage with local people, maybe the business partner here, okay? Say, oh yeah, I sell your product, but you have to share some warehouse rents. Okay, non-residents starting to pay rents. And then they rent the warehouse for the local partner here. If they rent the warehouse, it doesn't matter. The local partner will enjoy the benefit from it. But if the non-resident engage or rent a warehouse, it means the warehouse become a permanent establishment. Yeah. And sometimes it creates from providing a service. If they employ a employee, can be any nationalities as employee and come to work in Cambodia. Employee, they have an employee in Cambodia. And they work more than 182 days. Yeah. So then this employee become a PE. Yeah. So if the employee can be resident, can be a non-resident, and if this employee work for them, continue working every day, more than 182 days. Yeah, if he is a Cambodian, yeah, he become a resident for sure. But if a non-resident, from a salary point of view, he's become a resident. At the same time, when he became a resident of Cambodia, his employer also consider having a permanent establishment. Yeah. Yeah. Employer is now has a PE. So if it has a PE, what does it mean from income tax perspective? He had to register a PE in Cambodia, register as a taxpayer, a PE, as the PE entities, which you can choose, maybe a branch. Yeah, the most common, when become a PE, you register as a brand office, Okay. So, or if that's employee, first option can be a brand office. A brand office if that employee doing sale activity, which means if that employee perform business activity, mean selling good and service. But if that employee is not performing a sale activity, then you can set up here a representative office. Okay, you cannot get away with the registration. You need to register. You become a PE. You can choose. Can be option 1 or option 2. 1 or 2. So 1, if that employee do sale activity. You register option 2 if they don't do sale activity. They just come to, research, try to do some little marketing, trying to introduce the product, trying to collect information, a customer data or informations. So no sale activity, then the registration will be option 2, which is a representative office. Okay. Yeah, representative office. You don't need to pay income tax, no VAT. Why? Because you are not allowed under law to do a sale, to do business. Yeah, you only allowed to do research, collecting information for the head office. So as you can see, no business income will be generated. And that's why rep office, no TOI and VAT. What you need to pay? You pay salary tax, you pay income tax, maybe other related tax like parent tax, and signboard tax. Yeah, and you pay all the tax if you purchase from a local, because now you only a cost centers. Rep office is mainly a cost centers of the head office. Yeah, it's a cost centers, not a incomes generated centers. Okay. Okay. But other, such as warehouse, factory, workshop, mine, oil and gas well, quarry, any other place, extraction of natural resource, farm, plantation, including branch, those considered as a income generated centers. Yeah, they are liable for income tax, VAT, and all kinds of tax here in Cambodia. Mm. Okay. And if we just discussed about agents and employee. Yeah, agent conclude contracts, employee work more than 182 days. Yeah. So to avoid, I think I told you, if you don't want to become to subject, if you don't want to pay salary tax and you don't want to become a PE, what you need to do? Hmm? Now, if you know, you regard it as an employee of a non-resident, yeah. If you don't want to pay tax, especially tax on salary and the PE, what you're supposed to do. If let's say you are a resident now. First scenario is you are a resident. Resident is, yeah, you are, if you are Cambodian, not a resident, it means you are Cambodian or resident person. You stay here. And you actually employed by a non-resident. That happened. Yeah. Many of my friends, they manage to know some of the employer overseas, and then they employ, and then they can work from home, no office, coffee shop. It's a good job. You can go anywhere in the country. Yeah, that is so the most common word that you want to that many people do, we call freelance consultants. Don't treat yourself as employees, okay? As a freelance consultant. It means you are not an employee of a non-resident. If you are not an employee of non-residents, okay, yeah, it doesn't matter how long you work for them. Okay, you never pay tax on salary. And if you are not an employee of a non-resident, PE issue never happens. Because PE only say non-resident employee or has an employee work for them in Cambodia for more than 182 days. Yeah, but they didn't mention consultant or maybe service provider, or you call, many people say freelance consultant, right? Yeah, you can do that, no problem. You can have kind of an contracts by just saying not name as an employee, employment contract, but consultancy contract. And of course, you cannot just rename the contract alone. What you're supposed to do next. I believe you still remember. I hope, or maybe now I hope. Okay, first, don't call you as employees. Yeah, and call as consultants, freelance consultants. Of course, you can do that. But the next step you also need to do is, to avoid, from an employee status and a P issue. Do you remember the 4 conditions under the labor law and tax law to become an employee? You meet 2 conditions of 2 of the 4, you become an employee, right? Yeah. Don't invest too much. Okay. You can fix date and times. You put like you don't have risk to not to get paid, even though your work is very bad, something like that. Eh? Say on the contract, put really something that you a huge risk if you don't perform well. But of course, from the relationship point of view, it's going to be different. But from the purpose, if you are a consultant, the same. Like I sign a consultancy agreement, I have to promise to perform, a quality of work to my client. If I don't perform, I cannot get paid. Yeah. And of course, I have to invest everything by myself. I employ staff, I buy computer, I buy all the stuff, all the other tools to perform the work. Yeah. If you have this kind of agreement, yeah, then you are not an employee. Okay. You don't need to pay tax on salary, and the non-resident will have no risk to have a PE in Cambodia. Okay, this is what we call loophole of law. Okay, this is we call tax plannings. Yeah, if somebody asks me, a non-resident asks you, next years maybe you get a job, say, okay, do this. Yeah, it's allowed in Cambodia. Okay, they will love you because now they don't have risk to pay tax. Okay, they can employ people here in Cambodia, work for them without having a PE risk. All a non-resident, a company, they are afraid of having a PE. because when they have a PE, as I explained to you, they need to justify, explain to the tax authority how much the income that they generate from Cambodia. Because some multinational company, they generate $1 billion around the world. Okay. But based on the activity or business activity in Cambodia through a PE, how much they generate? Okay, they can tell maybe $1,000, but the tax will say, why too low? Yeah, because they don't have a separate accounts. They got, all the income and expense will be recorded, consolidated at the head office. And that's why to justify and reallocate the expense back to Cambodia, something they don't want. Okay. A PE advice, is we call international tax advisory service. Tax on salary, also involved, as you can see the link between what we call cross-border transactions. So if you want to get a job as an international, what we call international tax advice, you have to understand about tax on salary, non-resident employee, or a foreigner come to work in Cambodia, whether they pay tax or not pay tax, what they can be exempted. That's we call international tax advice. This is just the basics only. And again, permanent establishment, this is one of the what they call international tax advice, because non-resident, they want to come to Cambodia, want to do business. Maybe they don't have a long-term, commitments, and then they want to do something. And they will ask you, hey, if I do this, whether, what is the tax implication? Do I have a risk to have a PE in Cambodia? What can I do not to avoid the risk? Or something like that. That we call international advice. Okay. Because last terms, I forget to, telling the student, and one of the student, they want to get a job at Big Four, and then they recruit for international tax consultants. Then they will ask, which part of the tax law, or what is the tax, law say about international tax, or cross-border tax, transaction. So it's going to be, salary, expats, come to work, or maybe secondment issue, permanent establishment issue. Yeah. Okay. Maybe okay, tax on salary, you can know. Yeah, that's what the local law will say. Okay. So now I explain you. If the interviewer asks you, say, oh yeah, our tax law, the tax law that involve, or tax regulation involve international cross-border transactions, permanent establishment, a secondment, or something like that. Okay. Also, withholding tax also. Yeah. Okay. Do you have any questions? Okay. Oh, I go too fast. You ask me to repeat. Okay. No, you are so smart. Okay. Okay, this is Cambodian source income. I don't need to explain you again. Do you need me to explain again? No, waste of your time and my time, especially your times. Okay. Yeah. But remember, because I just want to highlight one point. Reinsurance. Many people misunderstand. And reinsurance and insurance, they will ask, what is the Cambodian source income? They put insurance and reinsurance. Okay. From a tax on income perspective, reinsurance and insurance is a Cambodian source income and can be subject to tax on income. Okay. But reinsurance under withholding tax is exempt. Remember that. A lot of people confused because they say, oh yeah, withholding tax is exempt for reinsurance. Then the from income tax also be exempted, but not. Reinsurance exempt from withholding tax, but not exempt under tax on income. Okay. But a lot of people will ask me, why? I don't see any foreign insurance company paying tax here in Cambodia. Yes, of course, because they don't have a PE. Yeah, because they don't have an office. They have no employees. Yeah, they only, get their reinsurance premium, which is exempt from withholding tax. Okay, okay, fine. If they don't have a PE, they don't need to pay income tax here in Cambodia. That's a problem. A lot of people will say, hey, like the theory is still contradict, not a contradict. I said it since last week that a non-resident generate income from Cambodia can be taxed either withholding tax or income tax. Okay, if they were subject to income tax, only they have a permanent establishment. If they don't have a permanent establishment, the worst that they can worst case scenario is that they're required to pay withholding tax. And if they are also exempt from withholding tax, they pay no tax. Okay, and that's why if the question asks, reinsurance is a Cambodian source of income and can be subject to tax on income in Cambodia, yes. But you can say when the non-resident having a PE, non-resident insurance company having a PE in Cambodia. Yeah. So based on our current law, a non-resident insurance company generate reinsurance premium from Cambodia, pay no tax. Because why? They exempt from withholding tax. And based on their business operation, they don't need a PE here. It's easy, insurance company. They don't need to have an employee here. Yeah. You don't need it. You buy the insurance premium only when you know them. If they want to buy insurance, you have to fly to their home country to negotiate. They will not come here unless maybe you buy $10 or $20 million premiums. If just a few $1,000s or 10,000, you have to go to the office overseas. So that's why they don't need to have people here. And the next point is regulations. In any country, insurance, they have very strict regulation. A non-resident, they have a restriction. Non-resident cannot sell the insurance premium in Cambodia. So it means they cannot come to sell the insurance premium in Cambodia. Yeah. So that is the points that they cannot having a PE. So all in all, they don't need to pay tax here in Cambodia. Okay. Yeah, I think because every exam, all terms, the Cambodian source income always come out a few questions. First is asking insurance and reinsurance premium or reinsurance premium whether it's subject to withholding tax or not. Reinsurance, no, but insurance, yes. But don't forget, only cover risk in Cambodia. If you buy insurance but not cover risk in Cambodia, you're also not required to pay income withholding tax. Yeah, sometimes you have a factory, a warehouse outside Cambodia. Yeah, I have seen some business, especially automobile business, because sometimes you order car from manufacturer overseas. The car manufacturer, they say, oh, they are going to produce one week is 20 car for you because you order a specific model, right? Only 20 car, 1 week, But after, after they produce, they complete, you have to take the car out of my factory. I don't have warehouse to store the car for you. Yeah, but if you do a shipping like 20 car per times, it's gonna be costly. Then you're gonna try to have like 100 or 200 or 500 car per shipment. Yeah, of course, you need a place, to store your car. You rent a warehouse outside the Cambodia. Yeah. So Payment for rent a warehouse outside Cambodia, also not subject to withholding tax, right? Come back to withholding tax. I'm afraid that you're confused. Where is it? Oh, here. Income from movable and immovable property if such property is in Cambodia, which means if we pay the rent for the property located in Cambodia, we need to pay withholding tax. But if we rent a warehouse outside Cambodia, the owners of the warehouse is a non-resident and we pay here, we pay from here. So the rental fee also exempt. But if we end up with paying insurance, buying insurance, sometimes you rent a warehouse, it's a risk, right? If the warehouse burned up, got fire, what will happen? And then you buy insurance from a non-resident to cover the risk, which is not in Cambodia. Then that insurance premium also exempted from withholding tax. Okay, the rent itself plus the insurance is exempt from withholding tax. Okay. It's clear now. Okay. Because I see that everyone make a mistake for the reinsurance ones. Okay, again, foreign source incomes. Income that is not Cambodian source. Income will be treated as a foreign source. Pretty simple. Okay. I think we already learned about self-assessment systems, small taxpayer, medium taxpayer, large taxpayer. We're gonna revisit again. But just trying to remind that small taxpayer, we don't study about small taxpayer. We only, the tax on income here mostly cover the medium and large. Small, we don't study. Yeah, medium and large we study. Okay. And next is QIP. We need to know, but QIP is quite complicated. We don't go into detail. If you want to study QIP detail, we study in advanced tax costs. We have advanced tax costs which cover mostly QIP because a little bit complicated. But this course just want you to know what is QIP. QIP is investment projects approval under what we call law investments. Be recognized as a QIP. One of the investor has obtained what we call certificate of recognitions from the Council for Development of Cambodia. So QIP is a project. It's not a company. It's not an entity. It's a project. So one entity can have more than one QIP, or you can do business without having a QIP status. So yeah, ComEd can now set up a school, but maybe Cassie can make a lot of money from running a school, and then he have an idea to invest in manufacturing. Okay, so he have an option to open a new companies just doing a manufacturing, but maybe he said that, oh yeah, his brand is very popular now, and then he set up a new manufacturing company, which is he want to use his brand, like ComEd school or whatever ComEd brand, and then he will say, hey, I use my same companies to set up a manufacturing companies. So then he know that to open a manufacturing company, he have a chance to get a QIP status. So and then he go to the CDC. CDC is near our school, yeah, and ask for the what we call investment projects qualifications. Okay, so when the CDC approve, they will issue what we call certificate of recognitions. Yeah, a piece of paper. So yeah, now you have a QIP, manufacturers, shoe, or maybe clothes. Okay. Okay, and QIP, you can get tax exemption. Investor who undertakes registration as a QIP and may then benefit from certain exemptions with respect to tax on income. So you will be exempted tax on income, minimum 3 years and maximum 9 years based on law investment. Yeah, you don't need to pay income tax. You pay zero income tax. For at least a small one, gonna get 3 year exemption. The bigger one, 9 years. That based on investment law. But now I see the government policies. If you invest in certain area, your tax exemption will be more. It's gonna like 12 years to 15 years. Okay. Especially senior will. If you want to rebuild or restore all the ghost buildings, you will get you don't need to pay tax for at least 15 years. Okay. Okay. Good for somebody, want to do a startup business. Hotel business there or any business. They have 1,000 buildings empty. Yeah. Yeah. Some building you can get for free. Some you pay a little. Okay. Yes, you can get free, but some maybe they spend only a few $1 million, then on structures. To finish it, you're gonna spend another $5 or $10 million. Okay. Okay. If you want, okay, if your parent or any your friend or whatever wants free building, let me know. I connect you to my friend. He's in charge of this work at the governments. Okay. Yeah. He can interview. If you don't have, if you don't want to invest like 2 or 3 millions, then you go to a free building. And on top of TOI, custom duties also be exempted. So it means when the QIP import goods, equipment, or inputs material, they are exempt from custom duty. But custom duty is include, we learned before, CD, custom duty, plus ET, excise tax. Excise tax, but not VAT. VAT is not a custom duty, even though we're going to pay VAT when we import goods. But the VAT is not considered as what we call excise tax, ET excise tax, CD custom duties. Man CD chùm riêng ấy. CD chùm riêng, bên thay vậy? CD គេថតចម្រៀងធ្លាប់ឃើញ this recorded this ដែលធ្លាប់ឃើញសម័យនេះលេងឃើញមែនទេទៅហងមាសhayទៅកន្លែងហងទៅកន្លែងហងមាសគេនៅមានបាទ compact disc អូខេមែន recorded disc ខ្ញុំខុសដែរខាតឃើញខាតលឺយូរ now we favorite Spotify Spotify okay Spotify ខ្ញុំទៅដឹងទៅតនាំមួយឆ្នាំហ្នឹងអូខេខ្ញុំចេះឆ្ងល់អា app ហ្នឹងនៅក្នុងទូរស័ព្ទខ្ញុំថែទៅនៅក្នុងទូរស័ព្ទខ្ញុំកូនស្រីខ្ញុំ download ចេះឆ្ងល់អាស្អីគេ Spotify ស្ដាប់តែ click មើលទៅស្ដាប់ក៏ចេញ list ចម្រៀងអូខេដល់ស្ដាប់ចម្រៀงយើងភាគច្រើនយល់តាម YouTube អញ្ចឹងតាម YouTube yeah Spotify okay duty include two custom duties include custom duty itself and excise tax but not VAT VAT if you want to get exemption we have to follow what we call VAT regulation which we already learned how can we get the exemption on VAT and if you are QIP if you don't want to be exempted from tax on income, what you will need to, you can elect, utilize what we call a special depreciation allowance. Because you say, oh, I don't want to be exempted from tax on income. Okay, then you can choose what we call special depreciation allowance. Special depreciation, we have like 40% depreciation rate. Okay, if your asset $100, then you have a SD 40. So you have $40 depreciations. So if you have $40 depreciation, the depreciation will be deducted against tax on income. But you have in the same year, the remaining balance, let's say now you can claim special depreciation for $40. So you have a book value, what we call tax book value, another, and then your tax book value. 60, right? Yeah, this 60 can also claim another, we call tax depreciation, not more tax depreciation. It depends on your asset. Your asset can be depreciated 20%, 25, 50%. Yeah, or 5% or 10%. So it depends on asset. I just assume maybe you have, because factory, maybe you have a lot of machinery and equipment. So the depreciation rate will be 20%. Then 60, another 12. Now total depreciation will be 52. Half of your asset now depreciated. This 52 can claim as a deductible expenses. So even though you don't exempt from income tax, but you have very high expenses, your income tax also low. But special depreciation, you can only claim for one time for one's equipment. Okay, if you buy new equipment next year, okay, you can claim the special depreciation again. But if you don't buy new equipment, special depreciation can use only one time, the first year that you purchase. And next year, the remaining book value will be depreciated not based on normal depreciation rate, no more special depreciations. But based on my experience, only one American manufacturing company choose special depreciation. The rest always tax on income. Yeah. So why? Okay. Okay. I wait for these questions. Why? You mean why that one American company choose special depreciation? Why? Because of two reasons. Before, tax exemption is TOI exemption is not a permanent tax exemption. What we call deferred tax exemption. When you don't pay income tax now, okay, when every year you don't pay income tax, but whenever you distribute this profit, the returning back to the shareholder as a dividends, you need to pay back. They don't call tax on income, but we call dividend distribution tax. And the rate is 20%, same. Yeah. And then 14% withholding tax. So as you can see, tax on income exemption is not permanent based on the old investment law. And that's why a lot of investors are fighting. And now the government decided to issue a new investment law in 2021 and now officially fully implemented in 2023 that tax on income exemption is a permanent. Okay, when you don't pay tax, okay, you don't pay tax when you make money, and when you want to distribute as a dividend, you don't need to pay what we call dividend tax anymore. So you only need to pay 14% withholding tax only. Okay. And that's why that American company is not, convinced that they don't really need to pay tax. If they choose special depreciations, so they don't pay income, they pay tax on income, but when they distribute as a dividend, they don't need to pay 20%. They only pay 14%. Yeah. Actually, they actually have a saving because they can claim more deduction. And then if they make money early, then they can pay early. Yeah. And yeah. And next question is a business reason because based on US regulation about asset recognitions, fixed asset recognition. So based on the company side, right, the US accounting, maybe if you are a big company, if you purchase some asset here, maybe some tangible good here, which less than $5,000 or $10,000, you cannot record as a fixed asset. You will just record as an operating expense. But any asset that you purchase, let's say more than 5,000 or more than 10,000, then you can record as an asset. It doesn't matter how long you're going to use it. Yeah, they use the purchase price, the value of asset when you purchase. Unlike IFRS, mostly we choose the useful life, right? If you use more than 1 year, it doesn't matter how much you buy. It's you should record as a fixed asset. Yeah. Okay. But not just US. I see some of the big company in Europe also. Some European country they also not me. Okay. Do you have any questions? Okay. So yeah, QAP. During exam for QAP, they will not ask you to do any calculation, but they may ask you QAP can be exempt from income tax, or if not exempt from, if you don't choose income tax, so you can choose special depreciation, for example. And they said basis of tax reassessment. Okay, please still not update. Should be TOI, tax on income. So the basis of tax reassessment for TOI, repeat again, resident taxpayer are subject to tax on worldwide income, or previously we called profit, while non-resident are taxed on Cambodian source income or profit only. Okay, it's same as tax on salary. So Cambodian worldwide, non-resident is only Cambodian source income. This is an income tax rate. What we call standard rate is applied for legal person. So 20%. For oil and gas and certain mineral exploitations activities, the tax rate is 30%. So the 30%, it doesn't matter you are legal or not a legal person, but if you do this business, the tax rate is 30%. Any activity that you do that considered as exploitation of natural resource. Yeah, not just only oil and gas and mineral exploration, but including like timber or what do we have? What can we extract from natural and sell besides coal? Yeah, gold is kind of mineral, right? Mineral. Yeah, coal. We don't have coal here. Okay. Before they said coal is bad for environment, but now US and German changed their mind. They stopped building coal, what electricity that produced from coal. right? They ban all other country, and they try to introduce wind, solar, or maybe alternative, energies. But now I listened to the news last week. The German have problem with wind. They have so many wind, and now the wind turbine kill a lot of bird and make a lot of noise. You know, yeah. And now they stop building wind turbines. Yeah. Okay. And then they start to explore a coal, plant again. They said now coal is, now they said they have a new technology when they produce coal and they use for the factory. When they do it, the process will not destroy any environment. They have new technologies now. Okay, coal is more efficient and cheap compared to wind and solar. Yeah, I don't know. That's a science, so they can change their mind anytime, like us. Okay. Um, okay, next, insurance companies. Okay, insurance companies, they pay 5% on gross premium. So gross premium, which means they cannot claim deduction expense. So how much the premium that they collect, they have to pay 5%. So there's no deduction. They pay straight 5%. That's it. So if you work for an insurance company, when you do tax return filings, it's easy. No need to do anything. Just try to count how much my premium I collect during the year and then multiply by 5%. This is the tax you pay to the government. That's it. Okay. The most complicated one, this business. And we don't study because we don't have a complete regulation yet. That would be a special cost for this because a lot of complicated method and it needs some sort of specialties, to actually come up with some clear guideline right now. Yeah, even though now we have some gold minings in Mundolgiri, we have gold minings, yeah, but they don't make money yet. Okay, next QAP is 0%. So they are subject to 0% tax rate. For small taxpayer, which is not a legal person, what is your tax rate for small taxpayer? Small taxpayer, you were subject to it. TOI, 0%, and then 5, and then 10, 15. The top rate will be 20. Same like tax on salary. 0, 5, 10, 15, 20s, based on the threshold. So the minimum threshold, if you generate from 0 to zero tax. Yeah. Mm. I will send you the list, the list. I cannot remember the threshold. Okay, they just update last year. The threshold they keep increasing, changing. Yeah, I will send you a list, or maybe I can check now. Let's see. Let's see. I have here. Mm. Got to be here. I have here. Can I make copy? Okay. I think I will send you the table. No need to record. I send you through a Telegram. Okay. We're starting to collect tax from 18 million Khmer Rial. Yeah. Below 18 billion Khmer Rial, it's mean profit, right? Profit. If you expend minus, income minus expense, if below 18 millions Khmer Rial, you don't need to pay tax. So I just get now like 18 to 24. This is a million Khmer Rial. You pay 5%. Huh? Yeah,ខ្ញុំ copy អត់ចេញខ្ញុំ copy អត់កើតតាមទូរស័ព្ទចាំខ្ញុំទៅដល់ office ខ្ញុំ copy តម្លាក់យកតារាងទៅមើលទៅស្នុកមើលប៉ុន្តែយើងអត់រៀនទេយើងគ្រាន់ដឹងរបៀបកណនីយើងកណនីដោយ tax on salary អញ្ចឹងកណនីតាមលំដាប់អូខេអត់ទេពួកគេអត់ចេញទេគេអត់ឲ្យទេទាំង small taxpayer គេអត់ឲ្យយើងកណនីអីទេយើងអត់គេអត់ចេញទេអ្វីដែលចេញតែនេះទេព្រោះហ្នឹងវា apply សម្រាប់អ្នកចាប់ពន្ធភាគច្រើន majorities okay អ្វីយ៉ាអ្វីពន្ធមួយទៀតដែលយើងត្រូវដឹងប៉ុន្តែ we will have a comprehensive PowerPoint talking about what we call prepayment of income tax. But now you just know that prepayment of income tax is also a monthly tax. We pay 1% on what we call turnovers. You see the word turnovers. So you generate a turnover every month. You need to pay 1% on the turnover you make. Okay. And turnover, this 1% is what we call a prepaid tax. That's why you see the word prepayments. Prepaid tax. So you have to have a prepaid every month, and then this prepaid tax can be offset with TUI. So at the end, you calculate tax on income. And then you calculate and you have, tax on income liability. And then you can deduct the 1% prepayment of income tax. If you still have the remaining amounts to pay. If you don't, okay, it means you already paid to the government. So we will learn about prepayment of income tax more detail. But now we just know, we need to know that we also need to pay what we call a prepayment of tax on income, PTUI, 1% on turnover. You see what turnover? Do you familiar with these terms? Yeah, it's a revenue. We learn, we have taxable turnover under VAT. But taxable turnover under VAT is different from monthly turnover tax under prepayment of income tax and another tax, what we call minimum tax. Okay. Yeah. But we discuss about you used to hear taxable turnovers under the VAT, but taxable turnover under VAT is not the same as turnover under prepayment of income tax. Taxable turnover of VAT, it means the sale, which is the supply, which is good and service. Okay, but the sale of good and service not always considered as a turnover under income tax. Yeah, it's a little, because under accounting we have what we call income from main business activity and other income, right? Or you say income from sale. That's income from main business activity. And then you have other income, maybe other interest income or other income such as other compensations, dispose of asset, gain on exchange, blah, blah, blah. Yeah, that's considered as other income under the accounting. Tax also the same. Yeah, but under tax law, turnover, we include two main income from main business activity plus what we call subsidiary income. Yeah, subsidiary income, we include royalty, rent, yeah, royalty, rent, selling of scrap, or provide free or use. Free use of assets. Yeah, you have asset and then you provide free of use. Free of use. Yeah, you don't charge, you just provide them, you can use free, no worry. Free of use of asset. Yeah, use for free. Okay. You can use for free, no worry, I don't charge you. Okay, but from tax perspective, nothing for free. Yeah, if you don't need money, tax department need money. Okay, so include four main different income. I think from accounting, if you besides main business activity income, main business income, the rest is going to be other income, right? Yeah, but from tax, they classify into three: main, subsidiary, the rest is going to be other income. So for turnover under the income tax law or prepayment of income tax rule, only the combine of two: main income from main business activity and subsidiary. Yeah. So this four main income, royalty, income from rent. If you have an asset and you rent it out, sometimes you have some office space, available, and then you can rent out. It just, your byproducts. Yeah. And selling of scraps, you have some packaging, maybe agile. Okay. Yeah. I don't know why, but I know the reason. I don't know why they include this, but I believe they not benchmark for all business, but they really focus on manufacturing. Because garment manufacturer here, they can generate income a lot from selling of scrap or wasted. Yeah, because all the material that they bring in. So some factory, they they don't have a technology. They lost a lot of their raw material. Some up to like 30% of what they purchase. So, and they sell this to the market here in Cambodia. They generate a lot of money. But other company, the scrap like HI, you don't have much. Okay. And free use of asset. Okay, you rent out, you generate monies. Yes, you also required to pay tax. Even though you don't want to get monies, give for free. But from tax law, say, hey, you have to charge, you have to pay tax based on the market value. Okay. Okay. Like your what guest teacher come to teach you, right? Explain it. No free land for tax. Okay. Okay. So as you can see, we also need to pay a prepayment of income tax based on turnover. So when you do a monthly tax return, besides salary tax, besides fringe benefit, withholding tax, and VAT, we also need to file what we call prepayment of income tax. And we have to pay tax 1% on what we call turnover. Turnover, which include main income from main business activity plus subsidiary income. Other income don't need to include. Let's say income from interest, dispose of fixed asset, compensation from some maybe from insurance is not supposed to include. Okay. However, what they said, taxpayer, where the taxpayer is in the period of what we call tax holiday, is when we're talking about QAP. If QAP, you get tax exemption for 3 years up to 9 years, you don't need to pay prepayment of income tax. But after the tax holiday, you need to pay. So, but if you are not a QIP, of course you have to pay every month because you don't have a tax holiday. So this exemption is only applied for QIP. But what they say, if you are exempted from PTOI, you also required to do a filing, but you complete, okay, this is my turnover, my tax is exempt, my tax payment is 0. You need to do a filing. What does it mean? It means here, sometimes people confuse. They say, if I exempt, I don't need to do anything. I don't need to do a filing. That happened with one of my clients. He is a QAP, he imports raw material from the customs, from the overseas, and then he doesn't need, the company doesn't need to pay custom duty, VAT, don't pay anything. And then they said, if I am exempt from everything, this importation, I don't need to declare to the tax department. Then they don't declare. They don't include in their purchase record, which they are required to do, right? We learned about VAT. We have to prepare. So, and now the tax department come to audit, okay? When they look at the purchase record, they don't see the company declare an imported goods. However, the tax department, they check with the customs record and they see, hey, this company import around $10 million equipment from overseas. And then the tax auditor, they come up with, say, hey, when you import and you don't declare to tax department, it means you sell this equipment. Okay. Then I will assess VAT and tax on income. I assume that you sell this equipment because you try to hide from me. So based on the tax law right now, whether you are exempt or not exempt, you have to declare everything to them. Okay, you declare. Now they clearly mention, even though you're exempt from prepayment of income tax, but you need to file prepayment of income tax. But the tax payment column, you just put 0. Yeah, you just put 0 because you are exempt, you don't need to pay. But you have to declare how much your turnover is, multiply, no 1%, okay, but the result is 0 and file to them. If you don't do that, it means you violate law on taxation. You will be penalized. Okay. Okay. What they say here, where the taxpayer is not subject to minimum tax. Minimum tax is another tax, what we call a final tax or annual tax. Okay. So a taxpayer here in Cambodia, they subject to what we call final tax or annual tax, one of the two. We just talk about it, TOI, or this minimum tax. So every taxpayer will subject to tax on income or minimum tax, whichever is higher. At the end, you are required to calculate tax on income and minimum tax and compare the two. So minimum tax will impose 1% on annual turnovers. Annual turnover. Okay, 1% on annual turnover. Tax on income, 20% on net profit. Minimum tax, 1% on annual turnover. So, and that's why they said, where the taxpayer is not subject to minimum tax, monthly PTOI must still be made. Okay. Why? Because the tax base of minimum tax and PTOI are the same because they're based on turnover. It just one is calculated on a monthly basis and one calculate, annual basis. But all in all, it will be the same. So what they say, some company can be exempt from minimum tax. Some company can be exempt from minimum tax. If you, what they say, you are compliant with accounting. You have a yeah, you follow accounting rule perfectly, correctly, which means you have audited financial statement. And then you can be exempted. And you get exemptions. If you are not comply with the accounting rule, you will be subject to minimum tax or TOI. Yeah. And if you exempted from minimum tax, of course, you are subject, you'll be exempted from TOI, but the tax law still require you to pay prepayment of income tax. The only exemption under the prepayment of income tax is you are QIP and during tax holiday. But for the minimum tax, you can be exempt if you follow accounting rule by having your financial report be audited by licensed firm. Yeah, licensed firm. Yeah, we have like more than 50 licensed firm, including Big Four. So in short, the tax that involve when you calculate tax on income at the end, there are three. One, you need to account for 1% prepayment of income tax, what you have paid every month on turnover. And next, you calculate tax on income, by accounting for income, expense, deduction, blah, blah, blah. Okay, and then you apply income tax rate, which is 20% on the net profit. Okay, keep it aside. And next step, you calculate what we call minimum tax, which is 1% on your annual turnover. And next, and then you compare the 20% tax on income and minimum tax. Whichever is higher, that is your what we call final tax liability. Okay, then you get final tax liability. The next step is you're looking at the prepayment of income tax you paid over the years, and then you deduct. Okay, if you have remaining balance, then you pay. If not, then yeah, here I already explained to you the 1%. Okay. Okay. Yeah, this is the way that you calculate, at the GN, you calculate income tax, what we call taxable income, the basic to calculate. Okay, you calculate and income minus expense to get what we call taxable income. You apply tax payable or TOI payable 20%. Okay, keep it aside, and then you calculate minimum tax 1% on turnover. You get, and you compare A and B. Okay, if A bigger than B, your tax liability gonna be A. If B bigger than A, here is B. So whichever is higher, okay, you pay here, and then you less prepayment of income tax. Okay, if it's positive, it means tax payable. Positive, tax payable. If negative, because you take your liability minus the deduction. If it's positive, tax payable. If negative, you can have credit carry forward. The same like we calculate VAT, right? Yeah, we take this. If it's positive, yeah, you get tax credit. So you get tax credit to carry forward, can carry forward to offset with future tax liability. Okay, now it's 9. Okay. Oh wow, we're done with session 1. Okay, no, it's just the start. Yeah, we will go into detail. It just what I'm trying to explain on how we calculate, the income tax from whatever we start, what is the end result is. Next, we're going to study in detail on how to justify income, taxable income, and deductible expense to get the result that we just explained, that I just explained.